Hi everyone, and welcome to Trader Talk Radio, the original show, our market analysis show for today, Sunday, the 11th of December 2022. Apologies for the last 2 weeks. We haven't run TTR for the first time in 6 or 7 years due to our Bali trading retreat. The team was in Bali trading together, and we just couldn't get everybody out to run the show. So we do apologise for a couple of weeks off, and we'll be back into it for this week and next week. I think we'll be back before we have a break. There will be no show on Christmas Day. I think we're in this week and next week, and then we'll have a break through to early January. More on that for you guys next week. Good show today. We're going to hear from Alexis on fundamentals. We're going to hear from Lloyd on currency strength matrix, and we're going to hear from Gordon on the US market overview as well. So lots coming up. Without further ado, let me introduce Alexis and her view on fundamentals. Alexis, this is still a fundamental-driven market. Lots going on. What are we talking about this week?
Hi, Paul. Thank you very much. And well, that's a really interesting market. I think there are a lot of speculations going on quite a lot of stuff. And I think the first thing I would like to look at is usually the dollar yen. Let me just share my screen and let's just take a look. So there has been a lot of talk about whether or not the Bank of Japan will finally stop easing. All right. So, there are just some articles I'm just going to pop up, just to kind of have a feel of where the Bank of Japan is at. This is just posted, I think, 10th of December, so just yesterday. All right. And Bank of Japan policymaker says it's too early to discuss easing exit. All right, so if we just briefly really go through the article, it talks about, that Japan still wants to look at inflation being holding at a stable 2%, even though it's actually now about 3.7%, but they are expecting inflation to come down, to stabilize kind of at 2%, which is what I think their so-called target is. However, I think it's just a lot of noise out there. I think behind the scenes we have the Bank of Japan shifting the currencies in a really interesting way. All right, and why do I say that? It's really simple. If you look at the charts, right, sometimes despite the news and all that, I think the charts is quite revealing about what it tells us. So while I don't think that the Japanese yen will strengthen super a lot because of its Bank of Japan stance, I don't foresee it weakening very, very aggressively as well. I think what's going to happen, especially when we are ending the year into Q1, is the Japan kind of stabilizing into a kind of a sideways motion. While the Bank of Japan seems really pretty okay with letting the speculators think they might or might not be increasing rates, they might or might not be easing, because I think they are pretty happy with where the Japanese yen is. It's not up here. All right, it's not up here where this was probably a place where they don't really want to be, where the Japanese yen is too weak, and their corporate, I would say their companies in their country are making a lot of noise, complaining about the weakness of the Japanese currency. Yet they don't want it over here where the the yen is too strong, and then it affects their import export. So it's finally come into I would say a sweet spot, right, where it's not too strong, not too weak, and it's somewhere where I think they can live with. And I think this is the range that we will kind of see whether in the next at least couple of months whether the Bank of Japan will keep it in here. So in a way, I'm probably going to just come out right and say that the trend trading for the bank for the dollar yen, I think is going to end soon. All right, I suspect it will meander over here for quite a while. All right, because of, it's like there's one party saying this, and the Bank of Japan is saying another thing, and yet the inflation figures just don't quite seem to fit where they want. If they're looking for a 2%, and we all know that inflation, the higher it goes, the harder it is to pull it back down, right? Every other economy is facing the same problem. They have to, their so-called tool, their only tool in their basket is interest rates, and they have to bump up interest rates. We have never seen interest rates this high for a long, long time, right? It's now at 4% for the US, 2% for the euro. I think Canada is 4.25. Australia is currently 3.1%. So interest rates have not been this high for a very long time. All right, so is the Bank of Japan still going to stubbornly hold its minus 0.1%? The only way it will be able to do that if the currency kind of stabilizes at a sweet spot where the government can sit with, right? And and there's no news. There really is no news that they are going to increase interest rates. So I think while the currency sits in this area, I don't think there's going to be any changes for the policies yet. They're just going to come out news once in a while saying it's okay, it's okay, it's okay, right? So I think this is going to be an interesting place for the Japanese yen to kind of range. It's about $5, 135 to 140. I think it's somewhere it can tolerate and see whether the inflation can change or not. All right, I've scrolled through a lot of articles. It's like 40% of them saying that Japan is bound to increase interest rates, and the other 60% is saying that nope, they're not doing anything. So it really is like a 50-50 guess at this point. Now, as always, when we want to take a look at the dollar yen, I always like to take a peek at the US government bonds. All right, so this is the 10-year bond yield chart. You can see this big retracement that has come down. If we just put a line over here, you can see this very nice bounce off this horizontal level. Again, while the US still has another interest rate increase going on in the next reading, I mean, it is speculated that they will increase its interest rates to 5% in the next reading. There's almost a 1% difference. Again, it depends on how aggressively they get there. Are they going to just increase 0.25, or are they going to jump to a 0.5? I suspect it's the former. They might just do a 0.25 to 0.5 increment as compared to their previous increments of 0.75 per pop. All right, inflation has dropped down to 7.7%. Well, it's not the best. All right, I think it's really hard. I feel it's really hard for inflation to come all the way down to 2% in the next year or so, because as long as that conflict in Ukraine and Russia doesn't end, there's always going to be this eternal question mark about the oil prices, right? The oil prices, the energy prices are not coming down, and if energy prices are not coming down, how then is inflation going to come down if so many things actually depend on energy? All right, so I seriously doubt that in the next year inflation will happily come down to 2%. I suspect it's going to come is 7.7, maybe a 5%, but as long as the energy prices don't change, it's going to be hard for the rest of the economic factors to change. It's like a domino effect. All right, so I suspect 2022 will be a very, very interesting period. To trade, I think we are potentially going to see moves in one direction for certain overextended countries. And just based on overextended, if we just scroll through the currency pairs, I'm going to go to the weekly time frame to make a point over here. All right, from a fundamental perspective, it's more and more interesting to trade now because there are a lot of currency pairs. I think I've spotted a few. Aussie Swiss, you can see that, if I'm just scrolling all the way back, this is a chart all the way to 1984, right? Look at where prices are at. They're all at support level. Aussie yen, okay, not quite interesting. Aussie dollar, you can see also prices are all at the bottom half of the chart. If we just cut the chart in half, it's all at the bottom half of the chart. So it's very, very interesting for fundamental traders because we are finally starting to agree with technical traders on some point, right? Because technical traders trade from technical indicators, overextensions, whether it hits a support and resistance. And all the more at this point, it's quite important, I think, as a fundamental trader to recognize that and understand the amount of volume coming when it hits a key support or resistance levels, right? And a lot of currency pairs are so overextended. They're either at the bottom of the floor or they are top of the ceiling. So I feel that those currency pairs are going to be the interesting ones coming into 2023, because it's going to be either a shoot to the moon in one direction, right, or it's going to be a break of the ceiling to the other direction. So if we just scroll through a couple of the pairs, I think there are some currency pairs that will be interesting. I think the Euro CAD, for example, has started in a really aggressive bounce. This is a weekly time frame, by the way, off the 130 level. It's been going up for the last couple of weeks. This is one of the pairs that will be very interesting to look at, because if it comes down anywhere to the 135 level, there is a huge opportunity to trade it back towards the top. Again, because it's a Canadian pair, one eye on oil, right? One eye on oil, and it can give us a very key direction to go. So I think in 2023, we have to kind of pay a bit more attention to Ainsley, the oil lady. All right, look at Euro Swiss as well, bouncing off a key support level, hovering just above it, So if we can catch these currency pairs and try to find that fundamental reason for them to kind of be in line with the technical traders, I think it's going to be a very cool opportunity. Euro yen, I think Euro yen, we've got to wait for Bank of Japan to make his decision. But again, look at the very nice resistance levels is bouncing off. All right, Euro dollar, okay, it's bounced off it's bounced off the $1 mark and has never came back since. All right, for the past at least 4 or 5 weeks. So again, these are currency pairs, the overextended ones that I feel is going to be really interesting because we are waiting for that U-turn. And as usual, to wait for that U-turn is like really takes a long while and long patience to do it. So I'm quite excited about 2023. Again, as long as the conflict in Ukraine and the conflict in Russia doesn't let up, I feel it's going to be really hard to just pick a direction and go. So really, really careful, not just say, 2023 comes by the bottom, just buy straight away. I think it's going to take a lot of push in one direction or the other. So my eye is on the key policy decisions that come up. We have elections coming up as well. So what am I looking for next week? I think just to be on the safe side, I'm still looking at a pound Kiwi. All right, I'm still looking at the pound Kiwi just based on fundamental perspective. I think pound has a bit of weakness, Kiwi has a bit of strength overall in the entire grid of economic statistics. But look at the pound Kiwi charts; they're so ugly. I'm really sorry for the Brits and the Kiwis, but it just looks very choppy. But what I am looking for is I'm looking for short-term moves to the downside, while the fundamental statistics are in my favor. I'm not going to hold anything too long. All right, fundamental traders, we like to hold our stuff a bit long, but now is not the time to hold long. I think now is the time to follow really strictly to your technical disciplines, your trading strategies, and just take your exits as they come, because we are about there. Something's going to change, but we're kind of not there yet. So a lot of patience. I would suggest a lot of patience. All right, for those of you who are patient, following your trading strategies, your exits and entries, I think it will pay off a lot more than catching a position and sitting on it, because the markets are so choppy right now, while all the policies are trying to, all the policies are changing. You can actually see the changes in the way the interest rates are slowing down, in the way the PMIs come up, and in the way that every time a PMI reading comes up, the market swings in another direction so wildly. So this is a really key sign of what a lot of traders are looking at, that volatility is up, and this makes it trading into 2023 quite exciting. All right, just to catch that key policy decisions that comes up, and then we could ride the wave for the entire year. So a bit quieter for the December side. Looking at pound Kiwi on a short term, but nothing to hold for months and months. What I'm really interested in is what 2023 brings for us. We're winding down the year. Hedge fund managers are covering their positions. So be a bit careful trading into the end of the year. It can be a bit tricky, but I think be prepared to open 2023. I think it's going to be a really exciting year. Yep. And let's just see what the technicals have to say, I feel. So I think that would be a Lloyd thing. I don't know, Lloyd, it should probably be a really exciting time for you. It's overextended everywhere.
Hey, Alexis, how you doing? Thanks for that. Look, I'm going to get you back on the end of year show for Christmas. I have a chat about China opening and the effect of that on inflation, with inflation at 1.6% in China. Will that change as it opens up and more demand comes in?
Oh,
and
yes.
Will that start to unhook some of the supply chain issues there are around the world, which means we're coming out of China?
Yeah, that's something.
And will it start inflation in other countries in a downward direction?
Yeah, I mean, I think that's something that I probably will be discussing in tonight's Sunday show with the group, because China opening up is another exciting thing which will turn currencies in one direction and gives us a little bit of move, I feel, instead of this sideways choppy motion that we have.
Yeah, I think you're spot on the money there. Thank you very much, Alexis. That's a fundamental view from Alexis. Thank you for that. We're going to have Lloyd come in and do currency